This is Audible.
How to get filthy rich investing in Bitcoin and other cryptocurrencies. Why it's not too late to become a millionaire investor with digital money. Written by Maxwell Emerson. Narrated by Tom Johnson. Introduction. Congratulations on purchasing this book on how to get filthy rich investing in Bitcoin and other cryptocurrencies. Cryptocurrencies and digital money are all the rage these days, with news stories and lengthy online discussions highlighting their successes, trends, and their potential to grow even bigger in the foreseeable future. It is highly likely you have already heard or read quite a bit about cryptocurrencies, and your curiosity has been aroused enough for you to try and learn more about this trend in investing. Cryptocurrencies are no longer just the stuff of nerds and underground markets, although they did start out that way. Bitcoin, the largest and most popular of the cryptocurrencies, brought this sector into the open and made it a fixture in today's tech-driven, mobile, and increasingly cashless society. Because of the rise of cryptocurrencies, the world's banks, governments, and financial firms have taken notice and are finding ways to adapt to digital money. So how exactly do cryptocurrencies work? A cryptocurrency, simply put, is a form of digital assets or money used for various transactions secured through cryptography. Cryptography is the utilization of different techniques or methods for securing communication via third parties or adversaries. In the world of cryptocurrency, all transactions are constructed, analyzed, vetted, and secured from the public through cryptographic methods. Cryptography itself is not exclusive to cryptocurrencies, as various forms of cryptography exist in different areas of modern life, such as information security, computer science, automated teller machines, electrical engineering, military communications, e-commerce, computer passwords, mobile banking, and other applications. For cryptocurrencies, Bitcoin in particular, blockchain technology using cryptography gave credence to their use as secure, accurate forms of digital currency. But cryptocurrencies were not always seen in such a positive light, especially in the earlier days when it was shrouded with secrecy and misunderstanding. The United States Senator Thomas Carper said, "Virtual currencies, perhaps most notably Bitcoin, have captured the imagination of some, struck fear among others, and confused the heck out of the rest of us." Cryptocurrency in its present form was merely a secondary result, not the main invention, in the formation of an electronic peer-to-peer cash system. The inventor, Satoshi Nakamoto, had set out to create this electronic and decentralized cash system that prevented double spending. Naming his system Bitcoin, Nakamoto announced in January 2009 on SourceForge, announcing the first release of Bitcoin, a new electronic cash system that uses a peer-to-peer network to prevent double spending. It's completely decentralized with no server or central authority. Before Nakamoto's Bitcoin came along, there had been several attempts to create electronic currency systems, mostly in the 1990s. For instance, Nick Szabo's BitGold, launched in 1998, was an electronic currency system that required proof of work functions from users, with all data collected and published using cryptography. Before BitGold, a notable electronic money corporation was DigiCash, founded by David Chaum. It also used cryptographic processes for transactions, but declared bankruptcy in 1998 and acquired by another digital currency company, eCash Technologies. With Bitcoin, Nakamoto could figure out a decentralized system of digital currency using peer-to-peer networks. In an email to colleague Dustin Trammell, Nakamoto wrote, "After more than a decade of failed trusted third-party based systems, DigiCash, etc., they see it as a lost cause. I hope they can make the distinction that this is the first time I know of we're trying a non-trust-based system. Cryptocurrencies, like Bitcoin, work much like any other electronic payment network regarding accounts, balances, and transactions. However, cryptocurrencies bypass state-backed currencies, replacing them with digital assets that are not bound by international borders, with security protocols that are difficult to forge or override. Most of all, cryptocurrencies are immune to the fluctuations of inflation or currency valuations as set by the Federal Reserve or other government agencies. Bitcoin is a unique conglomeration of cryptographic protocols, networking solutions, and open-source software all linked together to create a digital currency for users. Bitcoin's lead developer, Gavin Andresen, a software developer and entrepreneur out of Amherst, Massachusetts, said, "Bitcoin is designed to bring us back to a decentralized currency of the people. This is like better gold than gold." So how is Bitcoin's value calculated? Like paper currencies, the scarcity of Bitcoins will determine its value partly, as explained by Forbes staffer and writer Andy Greenberg. As with shiny metal-backed currencies, Bitcoins derive their value partly through their scarcity, which is defined not by how much can be dug up with shovels, but by a cryptographic lottery. Anyone can get Bitcoins without paying cash for them by downloading and running Bitcoin's mining program. The machines in Bitcoin's mining network, now in the thousands, compute an encryption function called a hash on a set of random numbers, and coins are awarded every 10 minutes to whichever miner happens to compute a number below a certain threshold. Decentralized payment networks, however, have had to contend with the problem of double spending, or an entity knowingly or unknowingly spending the same amount twice. Bitcoin could solve this through its peer-to-peer network, using network nodes for verification of transactions, and publicly distributed ledgers, or blockchains for record-keeping. Soon, Bitcoin was growing in popularity, and being accepted by merchants worldwide, aside from its use in various user-to-user transactions. Transactions in cryptocurrency networks like Bitcoin are confirmed by miners. Once a transaction has been confirmed, it will be added to the database of each node, where it becomes a permanent part of the blockchain and can no longer be reversed. In Bitcoin's network, miners must provide proof of work based on the SHA-256 hash algorithm. A hash is a product of a cryptographic function, and miners have to find a hash connecting the new block with the one before it. Once they have been able to provide this proof, they qualify for the task of being a miner and are compensated for their work in Bitcoins. What are the defining characteristics of cryptocurrency transactions? First, they are irreversible once confirmed, and there is no ruling body, leader, or government that can reverse a transaction done through the cryptocurrency network. Even miners cannot reverse a transaction that has been confirmed. This means if you are planning to send a transaction via Bitcoin or other cryptocurrency network, you need to be sure you are sending it to the correct recipient. Cryptocurrency networks are connected worldwide through computers and the internet, and they cross geographic boundaries. If you have a working connection, you will be able to use the software or the platform, send and receive cryptocurrencies, and get confirmation for transactions. The digital currency sector is fast and worldwide and works around the clock. Another characteristic of cryptocurrencies is their open and free nature. Anyone in the world can download the software and use cryptocurrency. There are no background checks or credit verification procedures, no paperwork to sign, or rigorous requirements to fulfill before you can start using digital currency. Any single entity does not control cryptocurrencies, so they are not subject to monetary policies that permeate state-issued currencies. While cryptocurrencies are free for anyone to use, they certainly utilize proper security protocols to ensure that transactions are safe and that data does not fall into the wrong hands. When using cryptocurrencies, your transactions and accounts are not linked to any real-world identities or do not display your personal information. Instead, Bitcoins and other cryptocurrencies make use of addresses assigned to users. Addresses are randomly generated sets of characters assigned for sending and receiving your digital cash. The anonymous and open design of cryptocurrencies have often been the basis for the increased scrutiny regarding their potential to be used for illicit activities. In a December 22, 2013 report in the Wall Street Journal, Robin Seidel wrote, "Lenders are leery of dealing with virtual currency companies because of concerns that the businesses could run afoul of anti-money laundering laws or be involved in illegal activities," banking executives say. Regulators and central bankers around the world have raised similar concerns in recent months. The concerns are not without warrant. One cryptocurrency with privacy and anonymity features beyond most of its peers, Monero, has seen an increase in value of 2,760% within the last year, solidifying it as the top performer among all cryptocurrencies in 2016. Each Monero is now worth about $12, from just 50 cents at the beginning of 2016, and its total value has been estimated at $165 million. With Monero's success, darknet market website Alphabay soon began to offer Monero as a payment option aside from Bitcoin, making it accessible to vendors and buyers of illegal drugs, stolen credit cards, handguns, and other items on the black market. The additional layers of privacy that Monero offers its users, particularly in their techniques such as stealth addresses, encrypted addresses unlinked to owners, and ring signatures, grouping Monero transactions with hundreds of other transactions to make tracing even more challenging, have made it extremely popular to those in the dark net. Andy Greenberg of Wired reported in a January 2017 article, "After Alphabay and a smaller dark web black market known as Oasis integrated the cryptocurrency last summer, its value immediately increased around sixfold." Alphabay told Bitcoin Magazine last month that the currency now accounts for about 2% of its sales. That's a small fraction, but still likely amounts to millions of dollars in annual revenue, given Alphabay's dominant position in the dark web drug market and estimates of that market's total size and growth. However, it can be argued that while there is a potential for illicit activities with the use of cryptocurrencies, the same can be said of cash and other financial instruments. Yet no one is clamoring for society to stop using cash because it can be used for illegal activities or under-the-table deals. Certainly, some people will recognize both the positive and negative implications of the growth of cryptocurrency and maintain a healthy and balanced perspective toward its adoption. While most experts and industry leaders agree about Bitcoin's status as a digital asset, whether or not it can be considered an actual currency is still up for debate. Because Bitcoin and cryptocurrencies in general are still relatively new and continuing to grow and define their place in the financial world, these digital assets face intense scrutiny and a level of hesitation from more traditional sectors used to state-backed currencies. In an article entitled "Money from Nothing," which appeared on The Economist on March 15, 2014, the question of whether or not Bitcoin can actually be considered money was posed, while pointing to the fact that the value of Bitcoins in circulation, as well as the daily volume of transactions, should highlight a proper understanding and labeling of Bitcoin as a form of currency. Economists reckon money is anything that serves three main functions. It must be a medium of exchange, which can reliably be swapped for goods and services. It should be a stable store of value, enabling users to tuck some away and come back later to find its purchasing power intact. and it should function as a unit of account, a statistical yardstick against which value in an economy is measured. The American dollar meets all three conditions. Bitcoin has some way to go, per the article. The article does point out that Bitcoin is a reliable medium of exchange because of its unique technical process, where users can swiftly and securely move their financial holdings across the globe. Bitcoin miners verify transactions around the clock, bypassing the need for a central clearinghouse or oversight agency, with compensation coming in the form of new Bitcoins. Because of this quick, efficient system, Bitcoin has kept costs low, and transaction fees are much cheaper than those of banks and other financial institutions. Recent numbers for the cryptocurrency sector are, indeed, noteworthy and point to an even more robust future. A research study conducted by a group from Cambridge University estimated that as of 2017, there were between 2.9 million and 5.8 million users with active cryptocurrency wallets across the globe. Many of them are using Bitcoin. The total market value of all cryptocurrencies stood at $27 billion as of April 2017. Merchants and retailers accepting Bitcoin payments have surpassed the 100,000 mark worldwide and include stalwarts such as PayPal, Microsoft, Wikipedia, Dell, Greenpeace, and Expedia. Speaking to the International Business Times UK, Sunny Singh, Chief Commercial Officer at BitPay, said in an interview, "Bitcoin is now moving into its second phase. The first phase was merchant adoption, and I think this is pretty much done now. The second phase is exploring Bitcoin's use cases. For example, one area where companies could see huge benefits from Bitcoin is in international payments. That could save them a lot of money." One place where Bitcoin transactions have become very popular because of the ease of transactions and the lower fees associated is Africa. Each year, billions of dollars worth of transactions are sent via the Western Union and other providers across the African continent, with the average transaction fees at around 12%. Remittance companies in Africa have been using Bitcoin for these transactions, and they are garnering much attention. A report by April Joyner, How Bitcoin is Moving Money in Africa, which appeared in USA Today on April 25, 2014, notes, companies like Hipachi and BitPesa have already begun to use Bitcoin for those home-to-grandma payments, known as remittances. For now, Bitcoin users need an internet connection, but these companies are developing platforms for the standard feature phones commonly used in Africa, rather than building apps for smartphones, which are rarer. So far, Bitcoin activity in Africa has picked up most among tech-savvy young men in urban centers, such as Nairobi. Just like in the West, Bitcoin faces some challenges in Africa, such as the lack of a system to cash out Bitcoins in exchange for government-backed currencies, and the legal ramifications as the debate between whether Bitcoin should be considered a currency or a payment system lingers on. In some African countries, tight restrictions have been placed on Bitcoin transactions because of the fears regarding money laundering. Still, as in many other places worldwide, banking institutions in Africa are slowly recognizing the potential of Bitcoin and testing or rolling out services using cryptocurrencies. With inflation, a big problem in many African countries, many proponents of Bitcoin have pointed out that this digital currency could, in fact, help consumers in the continent weather much of the problems related to economic instability. Specifically, a broader application of Bitcoin as a complementary currency could appeal to African consumers who are leery of their country's inflationary troubles, which are a constant threat to economic stability. Hyperinflation in Zimbabwe once rendered the country's currency nearly worthless, halting commercial activity. By contrast, because the circulation of Bitcoins is capped at 21 million, the cryptocurrency is, at least theoretically, inflation-proof. As a result, proponents argue, it could serve as a trustworthy store of value in periods of economic distress, Joyner writes. As far as monetary properties, cryptocurrencies have a controlled supply, limiting the number of tokens in actual circulation. In Bitcoin, as an example, supply decreases over time and will come to its limits sometime in 2140. Cryptocurrency networks control the supply of their token through a schedule code written into each token so that the future monetary supply can be calculated even today. Also, cryptocurrencies represent themselves and their actual properties and amounts, in stark contrast to accounts controlled by central banks and subject to monetary policies, inflation, deflation, and other manipulation of the supply. Unlike traditional bank accounts that are created by or run on debts, cryptocurrencies do not represent any debt amounts. The monetary and investment potential of cryptocurrencies are, in fact, already tipping the balance of power towards users in many parts of the world. Aside from Africa, where Bitcoin transactions of remittances are already gaining a foothold, people in other areas of the world are buying and investing in cryptocurrencies as a security blanket for the devaluation or fluctuation of their national currencies. Tech entrepreneur Brad Mills says, "If the trend continues, the average person will not be able to afford to purchase one whole Bitcoin in 2 years. As global economies inflate and markets exhibit signs of recession, the world will turn to Bitcoin as a hedge against fiat turmoil and an escape against capital controls. Bitcoin is the way out, and cryptocurrency as a whole is never going away. And it's going to grow in use and acceptance as it matures." If you are looking to invest in cryptocurrencies, your first option would naturally be Bitcoin. After all, not only is Bitcoin the pioneer among all the other cryptocurrencies, it is still the largest regarding value and volume among its counterparts to this day. Bitcoin was launched in January of 2009, and as of August 2017, it has been compartmentalized into 2 digital currencies, Bitcoin Classic and Bitcoin Cash. Bitcoin surpassed the value of gold for the first time in March of 2017, when a Bitcoin hit a high of $1,268 compared to a troy ounce of gold at $1,233. Bitcoin has become an attractive investment option because of its decentralized nature and explosive growth. Investing in Bitcoin has also become quite simple, as more and more well-trusted and reliable firms both in the United States and around the world are now buying and selling Bitcoins. One company in the U.S., Coinbase, not only buys and sells Bitcoins, but also offers users the option of linking their bank accounts to their Coinbase wallet, so transfers are easier. Another characteristic that makes Bitcoin particularly attractive to investors is the scarcity. Just like gold, which is in limited supply around the world and must be mined, Bitcoin uses assets that are in limited supply. There are only 21 million Bitcoins, and they are becoming more difficult to mine over time. So demand is increasing, while supply is decreasing. This is then causing inflation to increase. Add to this the intrinsic usefulness and security features of Bitcoins, and you have an investment option that could very well yield rewards for the person who joins in on the action at the right time. But in the general cryptocurrency sector, there are others you can certainly explore as well, each offering their own features that set them apart from Bitcoin, Monero being an example from earlier in this chapter. Another example is Ethereum, a cryptocurrency network that also utilizes blockchain technology. However, it differs from Bitcoin in that it not only offers a digital currency, called Ether, but also builds on the Ethereum blockchain technology to offer other decentralized applications. Ethereum is best known for its smart contracts or computer programming codes that can enable money exchanges, content transfers, or transactions of properties, shares, and other items of value. A smart contract is mostly self-operated, executing commands automatically as soon as the predetermined and specific conditions have already been fulfilled. Smart contracts also operated on the Ethereum blockchain so that they can run without the risk of tampering, censorship, downtime, fraud, or interference from an outside party. The Ethereum idea was to open the use of blockchain applications for more than just peer-to-peer digital currency transactions. Vitalik Buterin, the creator of Ethereum, recognized that developers were facing a dilemma of either expanding the functions already offered by Bitcoin and other cryptocurrency networks, which would be very time-consuming and complicated to do, or just develop a new blockchain application with a new platform to go alongside. Buterin's approach was different. I thought those in the Bitcoin community weren't approaching the problem in the right way. I thought they were going after individual applications. They were trying to explicitly support each use case in a sort of Swiss Army knife protocol, Buterin said. The core innovation Ethereum introduced was the Ethereum Virtual Machine, or EVM. This Turing-complete software enables any program to run on the Ethereum network regardless of its native programming language if time and memory are allocated. With this innovation, Ethereum allows different applications to be converted and used on a single platform, consolidating tasks. Developers can create decentralized applications, or DApp, but also build decentralized autonomous organizations, or DAO. Former Ethereum CCO Stephen Tall said, "A DAO consists of one or more contracts and could be funded by a group of like-minded individuals. A DAO operates completely transparently and completely independently of any human intervention, including its original creators. A DAO will stay on the network as long as it covers its survival costs and provides a useful service to its customer base." Ripple is yet another Bitcoin alternative you may want to invest in. Also referred to Ripple Transaction Protocol, or RTXP. This is an open-source internet protocol with a consensus ledger, remittance network, real-time gross settlement system, and its native currency known as XRP, or Ripples. Ripple is also a decentralized network supporting the exchange of tokens representing various units of value, including fiat currency, commodities, cryptocurrencies, and even frequent flyer miles or cell phone credits. Over the last year, Ripple has also been surging in value, with its digital currency increasing by about 40 times in 2017 alone. There are about 100 billion XRP circulating, each pegged at around 26 cents. The total market value now stands at $26 billion. CNBC's Ari Levy wrote in a May 26, 2017 report for the Financial Network's website, Ripple owns about 61%, or $16 billion worth, of XRP. If that were factored into the company's valuation, Ripple would be worth more than all but 4 U.S. startups: Uber, Airbnb, Palantir, and WeWork. Unlike other cryptocurrencies on the market, XRP is tied to, and majority owned by, a single company. Ripple counts many established industry stalwarts and institutions in its network of validators for its distributed ledgers, among them the Massachusetts Institute of Technology, Microsoft, WorldLink, Talindus Proximus Group, Swedish ISP, Bahnhof, CGI, and At Tokyo Corporation. Many insiders believe that Ripple just may have the best chance of overtaking Bitcoin in popularity in the future, with its distributed ledger system, more efficient pricing, and added security layers. In a nutshell, Ripple provides not just a digital currency, but also a platform for any currency, even Bitcoin, to be exchanged globally. Another cryptocurrency to watch is Litecoin, which is based on an open-source cryptographic protocol for peer-to-peer transactions. Litecoin has many similarities to Bitcoin, but its main advantage over the larger counterpart and other cryptocurrencies is its speed and even lower payment costs. Litecoin transactions are completed at about 4 times the speed of Bitcoin. Litecoin was launched on October 7, 2011 by former Google employee Charlie Lee and is now one of the top cryptocurrencies based on market capitalization. Litecoin is of particular interest to investors looking for an alternative or supplement to Bitcoin, not only because of its speed, but also its explosive growth. In 2017 alone, Litecoin's price has increased more than 1,500%, as reported by Forbes.com contributor Charles Bouvard in an August 31, 2017 article. The cryptocurrency reached $70.24 today, roughly 1,520% higher than its price of $4.33 at the start of the year, according to CoinMarketCap. As a result, the digital currency was able to build upon the gains it realized earlier this month. This sharp price rally has caused Litecoin's market capitalization, or market cap, to experience an even greater climb, rising more than 1,600% from roughly $210 million to $3.7 billion, additional CoinMarketCap figures show. Industry insiders look at Litecoin as the younger sibling of Bitcoin, and the general trend has been for Litecoin to follow whatever trend Bitcoin is experiencing. In other words, when Bitcoin experiences an upward surge, so does Litecoin. Their processes and technologies share many similarities, including their use of segregated witness for increasing capacity of transaction volume. While there are many other alternative cryptocurrencies out there, Litecoin has withstood the test of time and has accompanied Bitcoin through its ups and downs, according to Charles Hayter, CEO and co-founder of the cryptocurrency platform CryptoCompare. Also quite similar in many ways to Bitcoin is the cryptocurrency Dash, which used to be called Darkcoin and Xcoin. Aside from being an open-source peer-to-peer network for cryptocurrency exchange, Dash offers instant transactions, direct private transactions, and a decentralized governance and budgeting structure that makes it the first decentralized autonomous organization, or DAO. Miners add transactions to Dash's blockchain and verify the network, while master nodes enable the more advanced functions of the Dash platform. Dash was created and developed by Evan Duffield, launching it as Xcoin on January 18, 2014. The following month, it was rebranded as Darkcoin. More than a year later, another rebranding took place, this time to Dash, which is short for digital cash. As of June 2017, the daily trade volume of Dash averaged around $100 million, with a market capitalization over $1.4 billion. Over the next few chapters, we will take a more in-depth look into Bitcoin and other noteworthy cryptocurrencies, studying not only how they work, but also how you as a potential investor can compare these platforms and decide how or where you would like to invest. As you may have already seen, the cryptocurrency sector is moving fast and experiencing tremendous growth, surpassing the expectations of many who thought this alternative currency would be just another fad or confined within the communities of internet geeks and developers. As with any up-and-coming trend, you should be aware of the pros and cons of cryptocurrency investing, taking into consideration how your current assets could grow when you buy into any one of the growing lists of cryptocurrencies available. It does make sense to at least gain an understanding of just what makes cryptocurrencies such a hot item nowadays, considering its growing acceptance by retailers, financial service providers, banking institutions, and even governments. Japan, for example. Before you dive in, be aware of the steps to take and what to prepare. Hopefully, over the next few pages, you can get a ton of valuable information that you will find handy as you explore the exciting opportunities going on today in the cryptocurrency sector. Over the next chapter, we will examine how to invest in Bitcoin and how you can potentially reap financial rewards with the right strategy and timing. Chapter 1. Getting Started with Bitcoin. As already mentioned in the previous chapter, this whole slew of cryptocurrencies and the rise of digital cash started with Bitcoin, introduced by Satoshi Nakamoto, who may be just one programmer or a group of programmers, no one knows for sure, in 2009. This cryptocurrency platform and global electronic payment system runs on an open source software and a peer-to-peer system. No central entity controls or manipulates Bitcoin. Rather, transactions are approved by miners, verified by nodes in the network, and then recorded permanently on the blockchain or public distributed ledger. Many who are new or not entirely familiar yet with Bitcoin may think of it as similar to online banking or other electronic payment systems such as PayPal. And to some extent, the Bitcoin platform offers services that mirror the technology-driven nature of these providers. However, it must be stressed that while online banking and finance services allow you to access cash or lines of credit online, Bitcoin is purely digital in form. It does not exist in physical form somewhere else, whether stored in a vault or some cash drawer. Bitcoin bypasses traditional banking institutions and their regulations completely, and this makes users of Bitcoin free from the scrutiny, policies, and fees of central banks or providers. Also, while transactions done through Bitcoin are added to the public ledger and stored permanently, no database or controlling entity keeps a record of how much you have in your Bitcoin account. What are the steps for investing in Bitcoin? Set up a Bitcoin wallet. The first thing you will need to do to get started is to create your very own Bitcoin wallet. Your Bitcoin wallet is a digital account that allows you to buy, store, and sell your Bitcoins. It is much like a checking account, but if you have ever opened a checking account, you will be pleased to know that a Bitcoin wallet takes much faster and is much simpler to do. No paperwork, stacks of requirements, or proof of identity will be required. You can opt for a software wallet, which you will install on your own computer or web-enabled mobile device, or a Bitcoin hardware wallet, which is a physical device, such as a smart card or small computer, where your Bitcoin private keys are stored. If you go for the software wallet option, you will maintain complete control over your Bitcoins, so you are solely responsible for their security and maintenance. Another option is a web wallet or hosted wallet, where a third-party provider will host your account. This option is easier because they can take care of much of the process for you. But you must choose a third-party provider with very high levels of security and reliability. There are several popular web wallet providers with a good reputation, reliable records, and easy-to-understand, user-friendly functionalities. One of these is Coinbase, Coinbase.com. Coinbase boasts of a simple, functioning design and uses features aimed at making Bitcoin investment a breeze for beginners. Through this site, you can both send and receive Bitcoins via your email or directly from Coinbase. Coinbase also has an Android app with full features so that you can access your web wallet even while mobile. The steps are very easy for Coinbase. On their website, you will be asked to sign up for an account. Next, you will be directed to connect your bank account to your Coinbase account. A few verification steps will be required at this stage to make sure that you are the account holder. Once verification has been completed, you will be notified right away, and you can begin buying and selling Bitcoins. You can use Coinbase to both buy and sell Bitcoins, and they will also inform you of the current exchange rate before purchasing, as Bitcoin rates change constantly. Another third-party provider recommended for beginners is CoinMKT, coinmkt.com. This currency exchange provider is based in the United States and supports trading Bitcoins in US dollars. One good thing about CoinMKT is it allows the intertrading of any currency pair from its supported currencies. Aside from Bitcoin, they also support Litecoin, PP coins, Terra coins, Name coins, Feather coins, Nova coins, and some other cryptocurrencies. CoinMKT does not charge users any deposit fees for its supported digital currencies. The provider allows for international wire transfers and money orders in US dollars, and ACH, eCheck, SEPA bank deposit transfers are also in the works. For withdrawals, CoinMKT supports Bitcoin, Litecoin, PP coins, Terra coins, and more, as well as direct bank account transfers, wire transfers, mailed checks, and soon SEPA bank transfers for European users. Another popular digital Bitcoin wallet is blockchain.info. Aside from allowing its users to send and receive Bitcoins, blockchain.info also provides other services, such as recent transaction data, mined blocks in the blockchain, charts showing the Bitcoin economy, and even statistics and personalized resources designed for developers. As such, blockchain.info is often used as an information source for any media stories or online discussions on Bitcoins. Blockchain.info has mobile apps for both Android and iOS users, with functionalities for sending and receiving Bitcoins, as well as reviewing blockchain data. Blockchain.info also offers the dedicated Tor network hidden service, which allows increased privacy settings and less third-party interference for users, and provides encryption for added security. For the above web wallets, setup and verification procedures are very like that of Coinbase. If a software wallet is more to your preference, one popular and trusted option is Electrum. Electrum sets up security levels promptly and has a simple installation process. The system also boasts of fast processing times, low usage of computer resources, and the use of remote servers for data storage and delivery. When installing Electrum on your computer, you will be assigned a 12-word phrase which you can use to recover your Bitcoins from the Electrum servers in the unlikely event that your computer crashes. Also, Electrum will encrypt your Bitcoin wallet by default as an added precaution against hackers. Electrum has versions for Windows, OS X, and Linux, and is particularly recommended for Bitcoin beginners who prefer using a software wallet. There are other options, of course, such as Bitcoin Core, which is the official wallet preferred by the Bitcoin platform. Bitcoin Core serves as a full node, which means it can be used for verifying and transmitting transactions across the Bitcoin network, as well as storing a copy of the full blockchain. This feature provides the Bitcoin Core with increased privacy and reliability, because it does not have to rely on data transmitted from other servers or peers. But many users cite the slower speeds of Bitcoin Core as problematic, along with the dearth of features compared to Electrum. Armory is another desktop software wallet that works for Windows, Mac OS X, and Linux. It is a full-feature Bitcoin wallet and is known for its security features, although it can be quite complicated technology-wise for beginners. Armory offers its users 100% control over their Bitcoin private keys and the option of an offline signing procedure. For users considering hardware wallets, a popular option is Ledger Nano, which is smart card based. The Ledger Nano generates private keys offline and is set up through the Ledger Chrome application. During initial setup, a 24-word seed is created and backed up offline by the user for recreating the entire seed in case the Nano is damaged, stolen, or lost. Users also set up a PIN code for added security. Also, a hardware wallet option is the Trezor, which is, in fact, a tiny computer holding the private keys. During setup, Trezor assigns a 24-word seed which the user can use to backup. The Trezor has a built-in screen which displays the generated seed and an additional passphrase that can be added to the 24-word seed for better security. If USB sticks are more your thing, you may want to check out OpenDime, a USB stick which is also a hardware wallet for your Bitcoins. OpenDime is a read-only USB device with a private key generated by the device. Not even the user will know what this private key is. OpenDime uses Bitcoin message signing, Bitcoin payment addresses, and WIF format private keys. So far, these are some of the computer-related Bitcoin wallets out there. But you should also be aware of another option, paper wallets. Paper wallets were used for cold storage before the introduction of hardware wallets. In this option, private keys are generated and printed with the utilization of a secure, offline computer and kept somewhere safe. Paper wallets do tend to be inconvenient because you will need to generate and print a new wallet every time funds must be added to cold storage, although there is the option of bulk printing. Because of the availability of the web, hardware, and software Bitcoin wallets, paper wallets may not seem as popular anymore. However, many users still choose cold storage because computers that are connected online are still vulnerable to hackers and other threats. If going for the paper wallet option, check your printer security settings and make sure it is not storing and possibly revealing your private keys. An offline printer or a printer solely for Bitcoin paper wallet use would be more secure. A random number generator in your computer may be utilized for creating the paper wallet. There are some tools you can also utilize for easier setup of your paper wallet. One open source tool you can try is bitaddress.org, which can also be used both offline and online. The bitaddress page, bitaddress.org, is open from a web browser. Then the page is saved as an HTML file and saved to a USB flash device. You can then move this device to your offline computer, download the source file, run the program, and create the paper wallet. Whatever Bitcoin wallet or wallets you choose to use, you should always think of privacy and security as priorities, especially with Bitcoin, which gives you more control over your holdings. Although third-party providers such as Coinbase do offer convenience and many other features aside from just storage, the truth is, when you utilize a third party for security, you are not in full control of your private keys. In this regard, paper or hardware wallets would be more secure. Privacy should not be neglected. Keep in mind that every time you request blockchain data from a wallet, there is a possibility that the server may access your IP address and connect this to the other address from which the data was requested. Different wallets process data requests in their own ways, so make sure you understand this and, if possible, use a wallet which downloads the entire blockchain, such as Armory or Bitcoin Core. This lessens the chance of a server connecting a group of addresses to one user identity. Also, never reuse addresses. Most Bitcoin wallets today would generate a new address every time a transaction is requested. Remember that Bitcoin transactions are kept in a public ledger, and reusing an address may make it easy for someone with the right tools and knowledge to figure out which transactions are linked, and this could make you vulnerable as well as your holdings. It is a good idea to use several different kinds of Bitcoin wallets for your various transactions and needs. Perhaps you have one bank account where your salary is direct deposited, and you also maintain a savings account, an ATM account, a PayPal account, and other types of financial accounts to use for different activities. In the same way, having more than one kind of Bitcoin wallet helps to keep you more organized and secure in your transactions. Your paper and hardware wallets, which are more secure, may be used for savings, while the web, mobile, and desktop wallets, which are often connected online, would be suitable for outbound transactions such as buying. As your investments grow, you will realize the need for this compartmentalization of your holdings, both for record-keeping and security purposes. Start buying Bitcoins. No matter which service provider you use, it would be relatively easy to begin purchasing Bitcoins to add to your wallet. On your account or wallet page, you would find the options for buying Bitcoins using money from your linked bank account. Most providers allow you to link more than one bank account to your Bitcoin wallet. The price of Bitcoin changes every day, and sometimes price fluctuations may vary significantly. It is a market that is still relatively new and is still expanding and finding a long-term stability regarding volume and value, so fluctuations and price spikes are common. What you would want to check each day is the exchange rate for Bitcoin. As of this writing, the Bitcoin to USD exchange rate stands at 1 to $4,840. Of course, if you are using another currency for buying Bitcoins, the exchange rate would also be reflected. Start using your Bitcoins for payments. More and more businesses and retailers all over the world are accepting Bitcoin as one of their valid forms of payment. So as you accumulate your Bitcoins, you can use them for transactions. Some online vendors that accept Bitcoins are Overstock.com, Amazon, Whole Foods, Zappos, Subway, Victoria's Secret, and WordPress. You can then venture into some simple ways to make your Bitcoin investment grow. For instance, you can buy Bitcoins when the price is lower, then use the digital currency to buy goods when the value of Bitcoin increases, meaning you can get better deals or acquire more for purchases. Profit can then be made by selling these products with margins that allow you to both recoup your investment and accumulate added money. If you are fond of online retailing, you can make use of Bitcoin to purchase the goods and sell them at prices that are lower than their usual retail prices, but still profit from the sales. For instance, if you plan to purchase Victoria's Secret items and use your Bitcoins for payment, you will be able to buy more items at great prices because the value of Bitcoin has increased so much in recent months. Then you can sell these items a bit cheaper than what they would normally be priced in store, but still get good returns. Over time, this can become a very lucrative operation with financial rewards. In fact, simply having Bitcoins in your wallet for online transactions may be enough of an investment for you to start with, considering their quick ascent in value as of late. Gail Marks Jarvis of the Chicago Tribune writes in an August 31, 2017 article, "This week Bitcoin, a relatively young synthetic currency that people use to buy items over the web, made headlines after it hit an amazing peak in the price of $4,726. During this year alone, an investment in Bitcoin gained 358%. You read that right. While the stock market is up about 10% for the year, which is a nice gain for stocks in just 8 months, the money people have made in stocks is puny compared to what's been made in Bitcoin." Sell off your Bitcoins to other users. The truth is, selling off your Bitcoins is not nearly as easy as buying it, because there is no direct way to cash out Bitcoins or transfer them to your traditional bank account. The process involves finding a buyer who will pay for your Bitcoins with money, or in some cases, goods or services. Finding a buyer can take longer or shorter depending on where you are looking or the demand for Bitcoin at the time. This transaction is often done through an online Bitcoin marketplace, and the transaction is called a direct trade. Direct trade can be transacted via websites such as Coinbase or Local Bitcoins for users in the United States, or BitBargain UK and Bitilicious for those in the United Kingdom. These sites will generally require you to register as a seller. After your identity is verified, you will post your offer, and you will receive a notification from the website when a buyer indicates that he wants to trade with you. From then on, the interaction is directly between you and the buyer, but still within the website you use. The process itself is not vigorous, but the identity verification step for sellers requires more than just typing in information. Most websites would require a valid photo ID, government issued, along with scans of some documents showing your name and address. Buyers have not required so much information, but these websites are asking sellers to provide more information because the anticipation is that more regulations will soon be handed out, so they want to be as compliant as possible from the get-go. Understandably, you may not be comfortable providing this personal information, and if you would rather not verify your identity using these websites' requirements, you may opt to sell Bitcoins in person. Perhaps you have family members, friends, work colleagues, or other acquaintances who are looking into buying Bitcoins. Scanning a QR code or sending the Bitcoins directly to their Bitcoin wallet would be straightforward, requiring no other paperwork. If you are selling Bitcoins in person, make sure that you and the buyer agree on a rate that is fair and accurate. You may use the prevailing exchange rate from Bitcoin exchange websites or the CoinDesk Bitcoin Price Index. As a seller, you do have the option to add a certain percentage to cover your costs, so be sure this is discussed with the buyer from the onset. Aside from Bitcoin exchanges, mobile apps like BTC Report or ZeroBlock may also be used to calculate prices. When meeting up in person with someone who is looking to buy your Bitcoins, it is best to do so in a safe public place, especially if this is someone you are meeting for the first time. Depending on where you live, there may be Bitcoin meetups, venues, or events where you can trade Bitcoins and other cryptocurrencies, or simply have a place to meet with a prospective buyer. It is also recommended that you do not go to the meeting place by yourself. Ask a family member or a trusted friend or colleague to accompany you. Aside from Coinbase and Local Bitcoins, other websites you can look into for selling your Bitcoins online or in person include BitQuick, advertising quick transactions for both buying and selling Bitcoins. CoinCorner, purchases using credit and debit cards for users, verification required. BitBargain, bitbargain.co.uk, and Xapo, xapo.com. Chapter 1 continued. Keep buying Bitcoins. Investing in Bitcoin is a process you must commit to over a period of time. But as its value continues to increase, you will see and reap the benefits later. One option you may want to consider is a regular purchase scheme for Bitcoin. You can set up your bank account so that a portion of your income, for instance, direct deposits from your salary, would be automatically deducted toward buying Bitcoins at specific dates of each month. Most Bitcoin wallet sites offer this option. It is very similar to how automatic withdrawals can be set up for your 401k account or other savings accounts. If you are not comfortable with automatic purchase schemes, just make sure to set aside a portion of your income each month towards buying Bitcoins, and then timing it at or around certain days when you have ample time to look at the rates and get good deals. Also, there are plenty of websites and online exchanges where you can buy from sellers from all over the world, even from sellers in your community. When purchasing Bitcoins in person, you would want to practice the same precautions as when selling them. Only meet with sellers in public places and have a trusted family member or friend accompany you to the meetup point, especially if you are bringing a lot of cash with you. Local Bitcoins, localbitcoins.com, is one of the most reputable online Bitcoin marketplaces, allowing you to search and contact Bitcoin sellers all over the world. Remember, your goal as an investor is to position yourself to make as much money as you can in the near future with Bitcoins and other cryptocurrencies. So while the trend is on the upswing, you would want to have as much of the digital cash on hand as possible. Of course, there are other advantages, such as being able to use the Bitcoins for online purchases and getting great deals because of the exchange rate. But as already mentioned, having Bitcoin stashed in your digital wallet allows you to keep some leverage and can cash in on the benefits later. Trade in Bitcoins. Bitcoin trading is particularly exciting for those who already have some experience or knowledge in day trading. This involves buying Bitcoins at a lower price and then trying to sell them at a higher price within a short period, earning profit margins in the process. The larger players occupy the trading market for Bitcoins and other cryptocurrencies, but this does not mean there is no room for smaller, independent players to cash in on the action. Before entering a trade, have a reason and strategy behind it. In the world of cryptocurrency trading, you will need a clear-cut strategy to avoid being swallowed up by the larger players that have been there for a while. Are you entering a trade because there is a potential profit, or are you avoiding losses? When you have a target in place, it helps you to avoid knee-jerk reactions or impulsive decisions when a seemingly good deal is dangling in front of you. Just like in day trading, you should have a target level for profit taking and a stop-loss level for cutting your losses. This is especially important because now cryptocurrencies are prone to a lot of volatility. So if you are not careful, you could be exposing yourself to significant losses. Set conservative levels for profits and losses and stick to them. In the long run, they will allow you to stay in the game longer and see your investment grow. Manage your risk carefully. One way to do this is to avoid the lure of big risks for big profits within a short period. It may be wiser to look for those smaller, consistent profits that will eventually accumulate later into greater rewards, rather than bet big on just one trade and possibly losing even bigger. Assess your portfolio and spread risk wisely, never investing more than just a fraction of a high-risk or non-liquid market. Your portfolio becomes more resistant to volatility and fluctuations if investments are spread out evenly. When trading Bitcoin and other cryptocurrency, set your ego aside. It is better to make a profit than to be proven right. If you were wrong about a certain trade, don't sit around waiting for it to turn around so you can be proven right in the end. Get out while you can, and take the losses now before they get bigger. Every trader wins and loses at some point, and the goal is not to always get it right, but to learn how to manage the trades and eventually become profitable. Consider Bitcoin investing companies. As Bitcoin and other cryptocurrency platforms have surged in value, volume, and demand, some firms have capitalized on this trend and are now offering different ways for you to grow your digital cash, much like traditional investment holdings. In fact, one of the most prominent brokerage companies in the United States, Fidelity Investments, earlier this year announced they would be integrating Bitcoin into their website. In his article, A Major Investment Company is Taking Bitcoin Very Seriously, which appeared in Engadget.com on May 25, 2017, Tom Regan reports, later this year, Fidelity's clients will be able to check their cryptocurrency balance straight from the company's website, providing they store it on Coinbase, one of the leading Bitcoin exchange sites. Despite the cryptocurrency being around for almost a decade, this very public Bitcoin recognition makes Fidelity just one of a handful of big investment companies who have chosen to integrate it into their website. Regan adds, the announcement came at a recent blockchain conference, where Fidelity's CEO Abigail Johnson discussed the difficulties that Bitcoin raises for the financial world. While she admitted that many companies in the sector have given up on the cryptocurrency, she claimed that Fidelity is still a believer, revealing that even the company's cafeteria accepts Bitcoin. Buying into a Bitcoin investing company is often viewed as less risky, especially for beginners who are directly buying or selling Bitcoins. One example is the Bitcoin Investment Trust, which lets users purchase or sell off stock in the company. Bitcoin Investment Trust uses the money they raise to purchase and sell Bitcoins, growing the money that their investors have put in. The trust's sole activity is buying and selling Bitcoins, so their share prices correlate with Bitcoin's price in the market. Jordan Wathan of The Motley Fool noted in an August 30th, 2017 article, "Bitcoin Investment Trust's premium has exploded," that shares of the trust are even trading at twice the value of the Bitcoin holdings. Speculators are paying high prices to bet on Bitcoin. At the market close on Tuesday, Bitcoin Investment Trust, NASDAQ OTH GBTC, traded at a cost 101.6% higher than the actual market value of the Bitcoin it holds. Wathan goes on. Shares ended Tuesday at $832.99, even though the value of the Bitcoin backing the trust was valued at just $413.16 per share on Bitcoin exchanges. Over the 28 months or so of its existence as an over-the-counter stock, Bitcoin Investment Trust has closed at a premium to net asset value on 589 days. Only once has it traded for a discount. It happened back in 2015, when the closing price valued the trust at a microscopic 0.1% discount to the underlying value of its Bitcoin. Aside from the trust, other for-profit companies offer various commercial activities revolving around Bitcoin, offering venture capital, exchange-traded funds, micropayments, peer-to-peer lending, cloud mining, mining pools, Bitcoin exchanges, over-the-counter trading, and other services. Among these companies are Bitcoin Suisse AG. Founded in 2013 and headquartered in Switzerland, Bitcoin Suisse AG offers brokerage, asset management trading, and other financial services for the cryptocurrencies Bitcoin, Ether, and more. This firm is notable for being the payment gateway service provider of the town of Zug, where it is located, and is the first public entity in the world to start accepting Bitcoin payments for various public services. It even operates Bitcoin ATMs in many locations across Switzerland. Magner. Based in London, this multinational company offers Bitcoin trading and wealth management services for various cryptocurrencies. It also has a Bitcoin leverage trading system for retail traders, as well as a savings account with Bitcoin interest. This Bitcoin savings account is the first in the world, says Magner founder and CEO Joe Lee. We believe we are setting the future standard of savings accounts. Millennials are about to become the world's most powerful demographic. We are seeing these digital natives rapidly adopt new products for alternative investment and saving opportunities, he announced. Pantera Capital. This investment firm is based in San Francisco, California, and shifted from worldwide hedge fund investments to Bitcoin, digital currencies, and blockchain technologies. Pantera has several portfolio investments such as Zapo Circle, ChangeTip, Bitstamp, BitPesa, and BitTagos, all related to the cryptocurrency sector. In 2014, Pantera partnered with Fortress Investment Group, Ribbit Capital, and Benchmark to form a shared Bitcoin investment fund. CEO Dan Morehead said of the partnership, "We believe Bitcoin is at an inflection point, making it the right time for a transition to more institutional management." Satoshi Citadel Industries. This financial technology startup is based in Makati, Philippines, and services the Philippine blockchain and Bitcoin industry with various mobile payment solutions, remittance services, mobile money wallets, and other solutions. More significantly, Satoshi acquired KEZA, a startup company in the Silicon Valley. in August 2016. KEZA allows its users to invest in different stock markets with the use of Bitcoin. Investments into Bitcoin are still rapidly expanding and establishing parameters, but it is important to note that when you invest in Bitcoin, you are buying the digital currency. Now, the options are either to invest in the actual currency, anticipating its value to appreciate even more in the near future, invest in the numerous companies and investment firms that are engaged in Bitcoin-related commercial activities, or day trade using Bitcoins. But what about Bitcoin mining? As you know, one of the ways to accumulate Bitcoins is through mining. Although over the last few years, this process only becomes a profitable venture if done on massive scales. This requires you to purchase expensive Bitcoin mining equipment, plus invest in the electricity costs. It is more cost-efficient and practical for a beginner to purchase Bitcoins from sites or traders, rather than to set out and buy his own equipment for large-scale Bitcoin mining. Another possibility you may be considering is cloud mining. With cloud mining, you will rent the computer system for mining Bitcoins, usually located on a remote server, and the provider will supposedly make the process of mining Bitcoins much easier. The thing about these clouding mining companies is that many of them are scams, and even the ones that are legitimate are not cost-effective compared to just buying or trading Bitcoins. As a beginner, if you are serious about investing in Bitcoin and making your money grow, cloud mining should be avoided. Cryptocurrency IRAs. Individual retirement accounts, or IRA, is still highly regarded as one of the best ways for you to not only invest your money wisely and see it grow over the years, but also to secure yourself financially for the future. Assets which can be converted into funds for IRAs have grown over the years, including stocks, mutual funds, real estate properties, private placement securities, tax lien certificates, and gold. These days, cryptocurrencies are being used as funds for IRAs, and you should also seriously consider this option. Prableen Bajpai, a contributor for Investopedia.com, writes in an April 18, 2017 article entitled "The First Ever Ethereum IRA is a Game Changer." A first of its kind, the Ethereum IRA comes from the stable of BitcoinIRA.com, a financial conduit that pioneered the deployment of Bitcoin as a retirement tool. Their product, Bitcoin IRA, was launched around a year back in June 2016, and ever since it has garnered some rave reviews. The products offered by Bitcoin IRA are a unique alternative to traditional IRAs for investors looking at diversifying their portfolio beyond conventional asset classes. Bitcoin IRA pioneered the idea of allowing users to buy Bitcoins and funnel them into an IRA-approved retirement account, and others soon followed suit. The IRS, for its part, has also recognized this officially, stating, "For federal tax purposes, virtual currency is treated as property. General tax principles applicable to property transactions apply to transactions using virtual currency." In addition to Bitcoins, you can also invest in other digital currencies for your IRA, such as Litecoin, XRP, and Ethereum Classic. Bajpai notes, currently about 19% of Americans actively contribute to an IRA account, with only 5% of them taking full advantage of this savings tool by contributing more than $5,000 a year to IRAs, as per a TIAA-CREF survey. With the addition of cryptocurrencies to the list of assets, investments in retirement accounts may see an uptrend, especially among millennials. Use your Bitcoin to purchase other investments. Given the volatility of cryptocurrencies in general, it is only wise for you, as an investor, to spread your investments and use your Bitcoin earnings to expand your holdings. In the process, you are minimizing your risk, diversifying your assets, and growing your money. As already mentioned, many Bitcoin companies and websites allow you to link your Bitcoin wallet to your bank account, and many also allow you to purchase stocks or commodities directly from your digital wallet. Gold is one of those safe, reliable investments you would want to have in this market. This metal has a long history of being considered as a safe haven by investors, meaning it can weather market volatility and upheavals well. However, it is worth noting that in recent months, not only has Bitcoin surpassed the value of gold, but it is also quickly becoming a haven currency for investors. In his August 29, 2017 opinion piece, Is It Time to Own Gold or Bitcoin?, which appeared on Forbes.com, contributor Naeem Aslam said, "The ultimate safe haven trade for investors has been the yellow shining metal. However, a new popular derivative which is behaving like a safe haven is cryptocurrency. Bitcoin stands tall in that basket because as of today, the collective market cap of all the cryptocurrencies has reached $161 billion for the first time. The acceptance of Bitcoin has been phenomenal, especially this year. It has been highly volatile as well." Aslam states further, "The price of gold and Bitcoin are showing substantial gains, and this is nothing more than a risk-off trade. The question is, which one is more reliable?" Of course, gold has a massive history to back its thesis because Bitcoin is relatively new. However, this is not to say that Bitcoin cannot be considered as a safe haven trade. At the beginning of August, gold price bounced by $31 from the lows of $1,258.80 an ounce due to the heightened tensions between the U.S. and North Korea. Similarly, Bitcoin price was trading somewhere near $1,985 per coin in the middle of July, and as the hostilities between the two nations heightened, the price skyrocketed to $3,000. Thus, it is evidently clear that investors have used Bitcoin as another tool to hedge their risk. Coinable LLC, or Coinable.com, is one website that sells gold and silver in exchange for Bitcoin. It offers different types of gold coins and gold bars, such as Pamp Suisse 1-ounce gold bar, Austrian Philharmonic 1-ounce gold coin, and Credit Suisse 1-ounce gold bar, to name a few. Silver bars and coins offered by Coinable include Canadian Silver Maple 1-ounce silver coin, U.S. Silver Eagle 1-ounce silver coin, and Austrian Silver Philharmonic 1-ounce silver coin, among others. The company is based in the United States and incorporated in Wyoming. It runs distribution centers in California, and Coinable ships gold and silver within the United States and internationally. If you are looking to invest in gold or silver, this is one company to consider. Another company you can try is BitGuild, bitguild.com. They sell gold, silver, and other precious metals, and best of all, they do accept Bitcoin as a payment method. BitGuild offers secure shipping, with insurance, and prices are always up to date with the latest Bitcoin charts, so you know you're getting a fair price. Of course, you can also opt to use your Bitcoin wealth to invest in stocks or bonds. Financial experts and industry insiders concede that fluctuation is relatively higher in the Bitcoin market than it is in the stock market, so this is a great way for you to diversify your portfolio and increase your earnings. In many ways, both Bitcoin and the stock market offer lots of risks as investments, and it requires a constant assessment on your part, as the investor, to weigh the pros and cons associated with putting your money in these assets or markets. The important thing to remember is to never put more money into Bitcoin and other digital currencies than you can afford to lose. At best, it should be money you would like to see grow exponentially, but you can also survive without in case the gamble does not pay off. Therefore, financial advisors would caution you against putting a substantial percentage of your personal money towards buying, trading, or investing in Bitcoin in whatever form you choose. A conservative amount to start with would depend on you and your financial capabilities, but would probably run around 1 to 2% of your available cash. Any amount more than that would be increasing your risk too much already. Start out small and test the waters and focus on profitability first. Bitcoin payments for your business. What about accepting Bitcoin payments? Perhaps you are a business owner or entrepreneur and you are thinking of adding this payment option to increase convenience for your customers. If you do start accepting Bitcoin payments, you would be in the company of major retailers, such as Overstock.com, Expedia, for online hotel bookings only at the moment, but may expand to flights soon. eGifter, gift card site for places like Amazon, JCPenney, Home Depot, Kohl's, etc. Foodler, online food delivery and takeout system. Newegg, electronics retailer. Dish, satellite TV and internet service provider. And Shopify, e-commerce solutions. Is it a move that could help your business grow and expand your earnings? It is a possibility, especially as more and more consumers are adopting cryptocurrency and looking for ways to spend their bitcoins and other virtual cash. Many governments already recognize Bitcoin as a currency, so it is on the same levels as other forms of payment for goods and services, such as cash or gift cards. But if you are just starting out, no need to make it too complicated. You just have to start with whatever manner keeps the accounting and record-keeping tasks simple enough for you to track. Start by letting your customers know that you are accepting Bitcoin payments, such as a sign on your website. This increases awareness and let your customers know that in the future, if they have Bitcoins or have received Bitcoins and other digital currencies, they can use these to pay at your place of business. If your business is a brick-and-mortar store, you can use hardware terminals, mobile applications, or wallet addresses identified by QR codes. For online businesses, on the other hand, it is recommended that you work with an experienced programmer that can install the right codes and systems for you to start accepting Bitcoin payments. There are a number of companies that can help you get set up with accepting Bitcoin payments online or in-store, such as BitPay, BitPay.com, Worldwide Retail, Billing, e-commerce solutions, Shopify, Shopify.com, Bitcoin payment gateway systems designed for e-commerce websites, GoCoin, GoCoin.com, cryptocurrency payment processor, and even Coinbase, Coinbase.com, fast transactions from point of sale to your account. So far, we have looked at Bitcoin and the different options for investing into this cryptocurrency. In the next chapter, let us take a look closer at the other notable cryptocurrencies you should consider, including your virtual cash investments as well. Chapter 2. More cryptocurrencies to invest in. We have discussed Bitcoin a great deal in the last chapter, but the exciting thing about the cryptocurrency sector is there are so many other digital currencies you can invest in. Granted, many of them do not last very long or have minimal potential of growing or becoming profitable for you as an investor. But there are notable ones that you should seriously consider if you are to become a strategic investor in virtual cash. Why have so many other cryptocurrencies appeared in the picture? Cryptocurrencies offer a freedom from the control or dependence on traditional financial institutions, like central banks and governments, spurred cryptocurrency to mainstream consciousness and high demand. Soon, Bitcoin was followed by other similar ventures wanting to cash in on the trend. This has also been complemented by general attitudes worldwide leading towards increased personal control and less dependence on the multinational banks and government control. Cryptocurrency is poised to continue its positive surge and take its positions as an alternative form of the financial asset, regardless of one's location. And it can be expected that more and more virtual currencies will be launched in the coming years. Ethereum is the cryptocurrency platform widely considered to be second to the leader Bitcoin. This is true although Ethereum is not originally designed to be a currency marketplace, but rather a decentralized platform for smart contracts opening quicker and more efficiently. Roger Aiken of Forbes.com explains, "It's possible to build an exchange on it. However, it wasn't designed with that in mind. Take the issue of block times, essentially, how fast transactions are processed. Newer systems are much faster, or at least have lower latency. Ethereum, for example, currently has block times of around 14 seconds. But even that's nowhere near the super or ultra-low latency systems required by professional traders and institutions that pack a punch to beat the competition." As of this year, Ethereum is already the second largest cryptocurrency based on market capitalization, and its value, the coin is called Ether, has surged in value, making it a hot investment item. Furthermore, with the Ethereum platform allowing developers to develop smart contracts and applications, and with the vast potential of Ethereum to provide secure web-based transactions in everything from software to financial services, it is indeed a major player you must not neglect. One advantage of investing in Ethereum right now is it is considerably cheaper than Bitcoin. Bitcoin currently costs upwards of $4,500 at the moment, while Ethereum hovers at around $380 per unit. Of course, this can all change very quickly. But what you would want to do as an investor is cash in on the trend as early as possible, buying into Ethereum while prices are low, and then waiting until its price goes up to start selling, making profits along the way. Just like Bitcoin, you will need to have a digital wallet to start investing in Ethereum. You can opt for a software wallet, hardware wallet, or paper wallet, or even a combination of more security. Then, you will need to buy or sell Ethereum through online exchanges or marketplace forums. Coinbase is one of the most popular options for buying and selling Ethereum because it also supports Bitcoin and Litecoin. When you open an account with a reputable Ethereum exchange or website, it is best to go through the process of verifying your identity and submitting the required documents already, even if you are only planning to purchase Ether for now, which does not usually require identity verification. Verification steps are typically applied when one opts to become a reseller, and if you are already verified, then you can just jump right into Ethereum trading when you are ready. Before you begin trading, you will likely be required to either link your bank account to your digital wallet or deposit fiat currency into your account, usually through bank deposit or wire transfer. After the money clears, you can then begin buying, selling, and trading Ethereum through the exchange you are signed up with. Different exchange platforms have different protocols for transaction processes, as well as fees and confirmation times. After you have accumulated Ether, you can withdraw your virtual cash from your exchange to your digital wallet. You can also use Ether for online payments or other investments. Remember that there are both potentials for rewards and risks when buying into Ethereum. Robert Farrington, the founder and editor of the personal finance website, thecollegeinvestor.com, says, "It's important to remember that Ether, ETH, is a currency and should be treated as such by investors. You don't buy shares of Ether like you would stocks or ETFs. Instead, you are exchanging your dollars for Ether tokens. There are no dividends, no payouts. Your only hope is that in the future, other people on the internet will pay you more for your tokens than you bought them for. Investing in Ethereum is risky, but it could potentially be lucrative. Unlike Bitcoin or Litecoin, companies are really using Ethereum as a building block, something more akin to diamonds than gold. As an investor, this is a potential win." Another way to use your Ether as an investor is token sales, or more commonly known as initial coin offering, ICO. An ICO is quite similar to an initial public offering or IPO, But instead of stock, a company with an ICO is selling cryptocurrency tokens. ICOs have a time limit and a maximum amount of tokens to be sold. These tokens can be traded, have their own value which can go up or down, and as an investor, you can earn from the spikes or fluctuations in these prices. Because of Ethereum's position as a system for smart contracts, most ICOs are Ethereum-based. Stan Schroeder, a contributor for Mashable.com, explains in his June 18, 2017 article, the ICO is a revolutionary way to get funded, and everyone wants in. That's because Ethereum is more than a cryptocurrency. It's a platform for smart contracts that makes ICOs easier to do. Although, theoretically, you can have a token sale on a different platform. For example, Ethereum itself had a Bitcoin-based token sale in 2014, raising $18 million. Thanks to this, most ICOs these days are Ethereum-based. And to participate in the sale, you typically need to exchange your ETH for tokens. You do need to be aware that taking part in an ICO can often be hard for a small, independent investor like you. Much like IPOs in the stock market, some of the available assets would already be sold to the bigger players, and then there would also be the technical barriers. When thousands of investors are trying to join an ICO, the system can get bogged down, and you may experience delays. Slower transaction times could mean you lose out on opportunities to buy into an ICO. Still, it is a lucrative market, and you may want to go ahead and try your luck with ICOs, especially if you have already been accumulating and trading Ether. Schroeder says, tiny, unknown startups which barely have a functional product are raising tens of millions of dollars within hours. By amassing big amounts of ETH, which, typically, stays outside the market for a while, every ICO is driving the price of ETH upwards. The price of ETH is already up some 3,500% compared to last year. The potential for big investment returns is there if you have the patience. Say you bought 10 ETH in 2016 for a meager $100. Today, your 10 ETH is worth around $3,500. But say that instead of doing nothing with your ETH, you invested half of it in the Gnosis ICO this April. The price of GNO tokens more than doubled within hours of trading. If you sold those for ETH right away, you'd have roughly 15 ETH, which today would be worth $5,250. This scenario, while theoretical, isn't uncommon. In fact, with the growth Ethereum has experienced in the last year, gains such as these were easy to achieve, Schroeder explains in his Mashable.com article. Whatever you decide to do, make sure to set aside some of your Ether in a safe wallet or cold storage where you can wait for the right time to sell them high. Meanwhile, a separate amount can be invested in daily transactions and trades as you navigate your way through the marketplace and find ways to grow your money even more. Another cryptocurrency causing a lot of buzz is Litecoin. Litecoin became known mainly because it offered much faster transaction confirmation and turnaround times compared to Bitcoin or other cryptocurrencies. Litecoin is the brainchild of a former Google employee, Charlie Lee, who designed this open-source global payment platform using script for proof of work. Lee anticipated that, as Bitcoin became more popular, larger transactions would experience slower processing times, so he figured out a workaround. Ian Stedman of ARSTechnica.com writes in his Litecoin Explainer, merchants require large numbers of small value transactions happening quickly, something that Bitcoin isn't really well suited for. Larger transactions happening more slowly, remember new blockchains generate every 10 minutes, are more suited to it. That's why Litecoin has a faster transaction time, roughly 2.5 minutes, than Bitcoin. With 4 times as many coins in circulation, it theoretically offers smaller divisions of coins to make smaller transaction values more feasible. Litecoin is of interest to investors because of its surging value. According to figures from CoinMarketCap, as of August 2017, Litecoin's price reached $70.24, a 1,520% increase from its $4.33 price at the start of the calendar year. With this price increase, the market capitalization of Litecoin rose from $210 million to $3.7 billion. Experts point to Litecoin's close relationship and similarity to Bitcoin as one reason why it has surged in step with its larger, older counterpart. Litecoin, after all, was an offshoot of Bitcoin and still uses very similar technology. Both cryptocurrencies also utilize the segregated witness upgrade for upping capacity and transaction volume. But aside from its similarities to Bitcoin, Litecoin also offers perks of its own, which would be of great interest to investors like you. Because of the more efficient use of blockchain technology, Litecoin transactions average faster than Bitcoin. Litecoin's blockchain produces a new block every 2.5 minutes, making it attractive to merchants who would like to accept payments quicker. Also, working in favor of Litecoin is how it is set to publish more Litecoins compared to Bitcoin. With more Litecoins in circulation, consumers can pay with whole or rounded numbers for commodities they purchase using this digital currency. Like Bitcoin, investing in Litecoin is straightforward. You will need to set up a digital wallet, and you can use popular applications like Coinbase. Coinbase remains the most popular choice for beginner investors because it keeps the process simple. You create an account, link your bank account information, and begin to buy Litecoins through the Coinbase system. It is also recommended that you go through the identity verification process sooner so you are ready to start trading and selling Litecoins. Because Litecoin is still cheaper compared to Bitcoin at this time, it is a good time for you to go ahead and invest in it, keeping in mind the principle of buy low, sell high. While the price is low, you can position yourself to accumulate Litecoins, then start trading it for a higher price and getting the profits. Of course, keeping Litecoin in your virtual wallet also means you would be sitting in an increasingly appreciating digital currency, which could very well reward you with a larger nest in the future. For investors with international holdings, overseas connections, and even just a business that accepts international payments, Ripple may be of particular interest to you because of its open-source payment protocol, specializing in near real-time and cost-efficient settlements. Nathaniel Popper, a contributor for Dealbook, describes Ripple as more than just a currency, but also a secure and quick way to send money globally, with the support of traditional entities in the financial market. Ripple is being heralded in some quarters as a more significant innovation than its competitors. Ripple maintains not only a currency, but also a system on which any currency, even Bitcoin, can be moved around or traded, akin to a cross between the Western Union and a currency exchange, without the hefty fees. A person using the system can deposit any money into a personal Ripple wallet through a business that is signed up as a Ripple gateway. That money can then be moved to the wallet of another Ripple user, without going through a bank or a credit card system, Popper explains. Aside from its impressive market capitalization of over $10 billion, 9% of the total cryptocurrency market, and a 38-fold increase in its price in 2017 alone, Ripple enjoys the trust of major banks, partnering with these institutions in payment solutions for international transactions. Ripple is a member of the Faster Payments Task Force Steering Committee of the Federal Reserve and co-chair of the W3C's Web Payments Working Group. Some major banks using Ripple's payment protocols include Standard Chartered, Royal Bank of Canada, CIBC, Bank of America, Merrill Lynch, Santander, Fidor Bank AG, and National Australia Bank. An investor would want to put his money into something that is recognized and relied on by the big players in the industry, and this makes Ripple's XRP a must for you to consider if you are looking to expand beyond just Bitcoin. Ripple's value will likely go up further as more companies adopt its reliable payment solutions for investments and money transfers. Ripple is also a staple in cryptocurrency fund portfolios these days, so you will not have a hard time if you are planning to invest in this virtual currency. Per estimates, banks that use Ripple for transactions save about $3.76 per payment, or about $564,000 a year. Therefore, financial entities are flocking to Ripple, and this is a good sign for investors. It seems, however, that the most used digital currency exchange, Coinbase, still does not support Ripple. This means you must use another exchange. Two currency exchanges that are recommended for beginners looking to invest in Ripple are Poloniex and Kraken, both of which accept Bitcoins for Ripples. Poloniex is based in the United States and provides not just the standard cryptocurrency exchange features, but also technical analysis charts and price trends. It has a flat trading fee of 0.25%. Kraken, on the other hand, is known for its superior security features and more user-friendly features, making it more suitable for beginners. If you already have a Coinbase account, you can opt to transfer your Bitcoins to your Kraken or Poloniex account. Another digital currency, Peercoin, is a smaller cryptocurrency, but is among the first in the market, having been launched in 2012 with an identical hash function to Bitcoin. More recently, 2016 to be exact, Peercoin benefited from the Bitcoin halving that occurred when mining became less profitable. During this time, a number of Bitcoins programmed to pay out in the network were cut in half, dropping to 12.5 BTC from a previous 25. Miners decided to mine Peercoin instead, and because it used the same SHA-256 hash function, they succeeded. Peercoin is a relatively smaller market capitalization of about $8 million, but it seems to have another purpose, at least according to its creator Sonny King, who contends, "From my point of view, I think the cryptocurrency movement needs at least one backbone currency, or more, that maintains high degree of decentralization, maintains high level of security, but not necessarily providing high volume of transactions. Thinking of savings accounts and gold coins, you don't transact them at high velocity, but they form the backbone of the monetary systems." In other words, Peercoin is not necessarily designed to be for transactions, but more as a decentralized stored value currency. Randy Vittorini, Peercoin Talks community manager, says, Peercoin was intentionally designed to fulfill the role of backbone currency, rather than transactional currency. This focus on decentralization and user wealth protection is why there are no tiny transactions on the Peercoin blockchain. This does not mean, of course, that you cannot transact using Peercoin. PPC is accepted by specialty online businesses and charity organizations, and you can exchange Peercoin for items such as video games, jewelry, or others, but the number of merchants accepting Peercoin is considerably less. An investor should note that Peercoin is more concerned about the currency's future, and therefore its designers have focused their attention on its sustainability and long-term stability. As such, Peercoin is more suited for storing your wealth rather than for use in trading or other transactions. It is priced lower, making it an easy investment, especially if you do not have a lot of funding yet for the higher-priced cryptocurrencies. One cryptocurrency that is not derived from Bitcoin is Monero, which launched in April 2014 and originally called BitMonero. Monero is known for its enhanced security and privacy features, offering untraceability to users. But what sets apart Monero from others is more technical. It is based on CryptoNote, an application layer protocol with a blockchain that is almost anonymous. Transactions on the CryptoNote protocol cannot be traced through the blockchain by someone who wants to find out who sent or received the coins. Transaction amounts may be known, but not the sender, recipient, or the exact amount. Monero's market capitalization jumped dramatically from $5 million to $185 million in 2016, when Alphabay, a large darknet market, announced it would be adopting Monero as its cryptocurrency of choice. The anonymity and privacy features of Monero are especially attractive to darknet market users of Alphabay and Oasis Market, especially Monero's process of leveraging ring signatures and using stealth addresses to hide the identity of both sending and receiving parties. Ring signatures mix one user's account keys with other public keys from the blockchain, so it looks like a ring of possible signatures and making it virtually untraceable. If the privacy of Monero appeals to you, you should know that popular currency exchanges such as Kraken, Poloniex, and Bitfinex trade this digital currency. Poloniex was the first to offer the Monero currency, announcing it in July 2014 with 8 currency pairs. Bitfinex followed in November of 2016, offering deposits and withdrawals of the cryptocurrency, and offering trading pairs of Monero, XMR, with USD and BTC. Monero utilizes a proof-of-work algorithm that works with a wider set of processors, making mining more accessible to independent and smaller parties, rather than exclusively for large mining pools. Also, Monero's block time averages 2 minutes, and its miners are offered a permanent block reward. According to Monero, the block reward will never drop below 0.3 XMR, making Monero a disinflationary currency. The inflation will be roughly 1% in 2022 and go down forever, but the nominal inflation will stay at 0.3 XMR per minute. This means that there will always be an incentive for miners to mine Monero, and thus keeping the blockchain secure, with or without a free market. For investors looking to buy low and sell high, Monero's significant price volatility offers a lot of opportunities. Per CoinMarketCap, the price of XMR fluctuated from 25 cents in January of 2015 to a high of $60 by May of 2017. Traders can use this volatility to buy while the price is low, sell when the price spikes, and profit from the transactions. The virtual currency may also be used as a hedge for other virtual currencies. Another thing going for Monero as an investment opportunity in the cryptocurrency market is its value, which is still less than that of Bitcoin's, and thus more feasible for beginners who want to start with less capital. A Bloomberg report entitled "Investors Who Missed Bitcoin Rally Go for Dash, Ether, Monero," written by Olga Karev and published March 8, 2017, notes, other digital currencies are on the move too, including Monero and Zcash, to name some of the 700 plus out there. Investors who feel they missed out on Bitcoin are seeking a different path to crypto riches. Adam Wyatt, Chief Operating Officer at Bull Bear Analytics, adds, they think they've missed most of the move, so they are starting to look at other coins that could be their ticket. No need to feel like you have already missed the boat, especially as you read or heard about the continued surge in the price of Bitcoin. As we have already seen in this chapter, there are plenty of other cryptocurrencies with vast potential and already dramatic growth trends, which are still available for you to invest in, especially if you are finding Bitcoin's already steep price range beyond what you would like to start with. TechnologyReview.com has this reminder for investors exploring the virtual currency market. When it comes to the future of money, there is a growing consensus that cryptocurrencies are set to play a major role. One cryptocurrency has entered the public lexicon as the go-to digital asset, Bitcoin. But the cryptocurrency market is significantly more complex than the public lexicon might suggest. And while there have been plenty of studies examining the role and future of Bitcoin, there have been few that explore the broader cryptocurrency market and how it is evolving. Opportunities still abound, and if you act swiftly and strategically, you can still find yourself in a great position to ride the wave of digital money and reap the rewards it can offer. The important thing is to be as informed as you can as far as the overall market is concerned, while also identifying your strengths and maximizing them in your investment efforts. In the next chapter, let's discuss how you can potentially become a millionaire by investing in cryptocurrencies. Some possibilities have already been discussed in passing, but we will go over more detail so you can have a better grasp of what your plan should be and the steps you will need to take to achieve these targets. Chapter 3. Becoming a Millionaire with Cryptocurrency. Have you ever watched the show Who Wants to Be a Millionaire? This popular international game show, which originated in the UK, offers increasingly large cash prizes to contestants who can answer the multiple-choice questions. The game show became an international hit and has several versions in different countries, all retaining the same format of increasingly difficult questions on the way to the top prize. The show became a sensation because, let's face it, everyone would like the chance to become a millionaire. It is a journey to the top of the ladder, and viewers could relate to the contestants on the game show, who would analyze questions, ask help from the audience or their friends, and try to move another question closer to the million-dollar jackpot question. Being rich is a universal desire everyone can relate to, hence the success of Millionaire. Cryptocurrency did not start out to be a hot investment pick, at least not until it became more widely accepted in the financial industry and the stalwarts took notice. As Bitcoin's value rose astronomically, so did the wealth of the earliest investors who saw its potential or were simply there on the cusp of the breakthrough, right when it started to boom. For many, it was simply a matter of being at the right place at the right time, and now reaping the financial rewards from it. Until a few years ago, topics of trading and investing revolved around stocks, bonds, commodities, and foreign currencies. But cryptocurrencies have been thrown into the mix, jumping from just another way for online users to send money to each other to becoming a fast-rising star asset one should have in his investment portfolio. Speculators have added to the demand for virtual currency, not to mention the partnerships with major retailers and banks. Trading bitcoins and other virtual currencies are your best bet if you want to get rich in this market. True, there is the option of mining bitcoins, but the reality is mining tokens takes up much more time and computing power, not to mention technical knowledge, that it would probably not be worth your time. Trading is more realistic and feasible for the new investor. On paper, it may sound simple enough. If you had bought a Bitcoin 5 years ago for, say, $10, with today's price per Bitcoin of about $4,600, you would have already seen your money grow by 460%. Quite the investment return, right? But what if you had invested in $100 worth of Bitcoins back then? You would already be richer a few $1,000s today because of the increase in Bitcoin's value. This is where much of the demand for cryptocurrencies is fueling speculation and causing the prices also to spike. Investors are betting that the virtual currencies of today will continue to surge in value over the next few years, so they are trying to buy as much as they can, while also trading or selling some and earning profits along the way. Matthew Vint of thecollegeinvestor.com puts it this way: making $1 million with Bitcoins today is probably still possible, but you will need some capital. Bitcoins can fluctuate many percentage points every day. On May 22, 2017, the price jumped 10%. Day trading Bitcoins is going to be risky, but where there is volatility, there is an opportunity. Otherwise, you need to take a longer-term approach and conclude whether you think Bitcoin will be successful. If you believe that Bitcoin is going to be traded by foreign exchange dealers, market makers, and institutions one day, you might want to go long. Buying right now would be incredibly risky. The price chart is screaming bubble. But your point of entry is up to you. Don't expect to see more of the same fast growth now, though. Investing early seems to be the key, and having a knack for spotting those newer, smaller digital currencies that are on the verge of striking it big. For instance, investors who joined the first crowdfunding for Ethereum would have seen their Ether coins rise in value from around 37 cents to $350 this year. If you invested $10,000 back then, you would be a millionaire now. But would you have noticed the potential of the currency in its initial stages? That is where the difference lies. One fascinating story is that of Eric Finman, a teenager from Idaho. 3 years ago, he had dropped out of high school because he was finding it a waste of his time. He made a bet with his parents that if he became a millionaire by the age of 18, they could not force him to attend college. In 2011, Eric's grandmother had given him $1,000. Eric was 12 years old at the time and finding school frustrating. I was a failure by most metrics. I wasn't the most studious of teenagers. I played Call of Duty, and I snuck in Grand Theft Auto so my parents didn't see. My life was pretty average at that point. No matter how hard I tried, it was to no avail. I still got C's. I still was afraid to talk to my teachers who made my failures seem like a bad thing, and I just wasn't motivated. To make matters worse, one of his teachers even told him that he would probably not achieve anything in life, and he should just stop going to school altogether and just work at McDonald's. His parents withdrew him from the school and opted to homeschool him instead. But back to the $1,000 gift from his grandmother. Eric decided to put it to good use and invested it in Bitcoin, as suggested by one of his older brothers. In 2013, he cashed in one of his first Bitcoin investments, and now they were valued at $1,200 each. Harriet Alexander, writing about Eric's story in a telegraph.co.uk article, says, with the cash, the teenager launched an online education company called Botangle, which would allow frustrated students like him to find teachers over video chat. Before starting the company, he went to a Starbucks and offered to buy anyone a coffee if they would listen to his idea and give feedback. 20 people did. Buoyed by the launch of his first company, he spread his wings and begun interning at Silicon Valley startups. At the age of 15, he moved to San Francisco. Alexander adds, Mr. Finman now owns 403 Bitcoins, which at the current rate of $2,700 a coin puts his Bitcoin value at $1.09 million. He also has smaller investments in other cryptocurrencies, including Litecoin and Ethereum. Despite the volatility of the virtual currency, he is hanging on to it, believing its value will continue to rise. Fascinating story, but as you would notice, it took more than just buying into Bitcoin. In the process, Eric Finman's money grew because he also diversified his portfolio and traded over time, while keeping enough to have a sizable accumulated value of well over $1 million. He was not just sitting there counting his money. Eventually, he found some other more enjoyable things to do besides school, and his investment in Bitcoin helped him achieve more. Finman's prediction for the future price of Bitcoin? Personally, I think Bitcoin is going to be worth a couple $100,000 to $1 million a coin, he told CNBC. Interestingly enough, when Finman pitched Botangle to an investor back in 2015, The investor had offered him either $100,000 or 300 Bitcoin. At the time, Bitcoin's price had dropped to about $200 in cash value, but Eric took the Bitcoin deal because he believed it would bounce back. My parents asked, "Why don't you take the more cash?" Finman recalled to CNBC. "But I thought it was more of an investment." Tyler and Cameron Winklevoss twins, more popularly known for their legal tussles with Facebook's Mark Zuckerberg, are among the more prominent Bitcoin investors. Their holdings in Bitcoin have increased their net worth around $11 million, and the Winklevoss twins currently fund some Bitcoin-related startups such as BitInstant and WinkDex. The twins also started their own Bitcoin exchange in 2015 called Gemini Trust. Just this month, CBOE Holdings, which has 14 trading venues worldwide, announced a partnership with Gemini Trust, powering their Bitcoin indices and derivatives. Gemini's key concerns in the cryptocurrency ecosystem have always been security, compliance, and regulatory oversight. Tyler Winklevoss, CEO of Gemini, said in a statement, "By working with the team at CBOE, we are helping to make Bitcoin and other cryptocurrencies increasingly accessible to both retail and institutional investors." Another interesting approach is that of Argentinian entrepreneur Wences Casares. Casares is widely known to be one of the earliest adopters of Bitcoin among the elites of Silicon Valley. Casares founded an internet service provider, a bank, and a video game company. But he is betting big on Bitcoin, and in fact, he is running the startup Zappo, which is right smack in the middle of the Bitcoin revolution. For Casares, not much needs to be done to be able to profit from cryptocurrency. Take 1% or less of what you own, buy Bitcoin with it, and then forget about it for at least the next 5 years, ideally the next decade. You either lose 1% of your net worth, which most people can take, or you make millions, he said at a dinner meeting hosted by the Coin Center, a cryptocurrency policy group in New York. "If it fails, it will be worthless," he says. "If it succeeds, in 5 to 7 years, one Bitcoin, will be worth more than $1 million. According to Casares, the chances of Bitcoin succeeding are above 50%. Casares adds, "The world used to have a global standard of settlement for 5,000 years, and it was gold. If you wanted to compare how much it cost Cleopatra to put together an army to how much it cost a Chinese emperor, it was straightforward. We don't have that today. If Bitcoin succeeds, I believe it will be the biggest leap forward in the democratization of money we have ever seen." Perhaps a healthy balance would be a better approach for an investor like you. You can choose to let your virtual wallet grow, accumulating your Bitcoins, Ether, and other cryptocurrencies. But you can also set aside a portion towards trading, especially in anticipation of price spikes that will allow you to profit. In addition, a portion of your earnings can go towards diversifying your portfolio and investing in other types of assets, such as stocks or bonds. Just like investing in the stock market, foreign currencies, bonds, securities, and other financial assets, investing in cryptocurrency and becoming profitable takes some time. As you can see in the examples in this chapter, the clear majority of investors who made it big in the cryptocurrency sector did not do so overnight, but over a period of time. It is not like hitting the lottery jackpot and becoming an instant millionaire. In fact, because of the volatility and ever-changing landscape of not just the cryptocurrency sector, but the financial markets, there will be times when you will take some losses, or certain trades you thought would be profitable would turn out to be losing ventures. There is the possibility of hackers and other threats to your cryptocurrency wealth as well. In recent months, news headlines have bannered how hackers have been targeting various Bitcoin exchanges, such as BitHum, which accounts for about 75% of the Bitcoin market in South Korea. with hackers increasingly using sophisticated techniques to get into cryptocurrency systems. In fact, one vulnerability that hackers have recently targeted is the mobile phone numbers of cryptocurrency users. In his article, hackers have found a vulnerability and are targeting Bitcoin owners, which appeared on August 22, 2017 in ForexLive.com. Contributor Adam Button reported, hackers are finding out the telephone numbers of virtual currency owners, then calling up mobile providers and changing their numbers to a new device. Once they have control of the phone number, they use it to reset control of passwords, get access to Bitcoin accounts, wallets, and drain the contents. Fortunately, these virtual currency exchanges and providers are constantly reviewing their security protocols and ramping up their safety systems so the issues can be addressed. But threats such as theft and computer hacking will always be present in the interconnected, web-dependent financial ecosystem. So as an investor, your responsibility is to be as prepared as possible in case these unfortunate incidents occur. In the next chapter, we will go over some of the benefits of cryptocurrency, which should further encourage you to act as soon as possible and invest in these virtual currencies of the future. Chapter 4. Benefits of investing in cryptocurrency. Before channeling your funds toward a new venture or startup enterprise, you would, of course, want to take a look at the advantages of the venture and possible rewards you will get. After all, it will be your capital which you are directing towards an investment opportunity. So it is only right to look at how this could help you recoup not only your investment, but also reap the profits. The same goes for cryptocurrency investing. So now, let us see what the benefits of virtual cash are, and why you as an investor should get in on the action. One of the reasons why it is beneficial to invest in cryptocurrencies at this time is the lower volatility being experienced by the sector in recent months. Compared to when cryptocurrencies first made a big splash just a few years ago, volatility in cryptocurrencies has calmed down significantly, making it more sustainable and a safer bet for investors looking for long-term stability. Also, because cryptocurrencies are still relatively new compared to other financial assets and markets out there, there is still a lot of room for improvement. It is a segment of the financial world that is growing and is expected to grow substantially over the next few years. Many experts believe that the dramatic growth we have seen in Bitcoin, Ethereum, Ripple, Litecoin, Monero, Dash, and other major cryptocurrency players is barely even scratching the surface, and growth is still expected by leaps and bounds. Another advantage is cryptocurrency's position as a virtual asset, making it very attractive for the internet-savvy generation. In today's high-tech world, a lot of our daily transactions and activities have been adapted to the online world, including banking and finance. Wire transfers, direct deposits, bill payments, and other financial activities which you had to perform at your local bank years ago are now available at the tip of your fingers using your computer or mobile device. An entire generation has grown up connected to the internet at all times, and they expect this from their financial providers as well. Cryptocurrency is a strategic advantage because it is an online currency that is adapted very well to the workings of the web. It is a currency that was developed by programmers who are very familiar with how internet transactions work and the security and processing needs of online users. As such, Bitcoin and other virtual currencies no longer need to be repositioned for the online world. They are right smack in the middle of the action. Because of the very low processing fees for much of the cryptocurrencies and digital currency exchanges, they are also becoming the choice of more and more consumers. Virtual currencies can keep their costs low because of less manpower and overhead expenditures. Unlike the traditional banks and their various fees for opening accounts, maintaining balances, transaction fees, return check fees, and a host of other miscellaneous costs, cryptocurrency transactions come with very minimal fees, making them beneficial for investors and traders. The subject of hacking and identity theft has been an area of concern in the cryptocurrency world, especially as hackers have continued to target individual users, currency exchanges, and entire virtual currency systems. Still, cryptocurrencies for the most part provide greater security and privacy to users, especially because they have layers of protection and protocols that keep confidential, personal information shielded from the public. Identity theft is of concern for consumers who use their credit or debit cards for purchases online or in-store. Credit and debit cards operate on a pull basis, deducting the amount from your line of credit. The risk of identity theft increases because information must be supplied and can often be compromised in this process. Cryptocurrencies, on the other hand, utilize a push basis where the user will just send an exact payment settlement without having to give any other information, thus decreasing the risk of identity theft. Is digital currency secure? In an interview with Forbes.com's Laura Shin, Stanford Business School professor and economist Laura Athey answered, "Some parts of the architecture of digital currency are vastly superior to existing systems. When you pay for something with a credit card, you are giving someone all the information they need to know to buy something online. What an idiotic way to architect a system! If I pay someone, I tell them everything they need to spend my money. If I'm paying you, you shouldn't have to know how to buy something with my credit card. You should have to know how to receive something with my credit card." Athey continued, "Bitcoin is not architected that way. If I know your address, I can send money to you. But I can't take money out. And that makes a hell of a lot of sense. We wouldn't have the Target security breach if all Target had was an address without any way to use those credit card numbers. The credit cards are moving in that direction. Within a couple of years, they'll use something called tokenization. So the numbers you use to send are not the same as the numbers you use to receive." Another thing going for cryptocurrencies is the faster transaction settlements, especially for big purchases. Usually, for large transactions such as real estate or property purchases, there are many paperwork requirements to be fulfilled and third-party processes included. These include notary filings, deliberations with lawyers, the filing of permits, application processes, and many other reviews and fees that cost more and delay the transaction. However, cryptocurrencies cut through these requirements significantly, removing the middleman altogether and letting two parties complete the transaction on their own in a much shorter time. The verification time for a cryptocurrency transaction only takes a few minutes. Bitcoin and other virtual currencies have become a more efficient means to safely complete transactions, regardless of the amount, between two users who wish to bypass the oversight of third parties and burdensome requirements. This speed in transaction time is also beneficial for the investor who must often complete trades with partners from all over the world within a matter of minutes to earn more profits or reduce losses. Closely related to the transaction speed and efficiency of cryptocurrencies, another benefit of the virtual cash revolution is the greater accessibility to a larger segment of the global population. It is estimated that 1.5 billion to 2 billion individuals all over the world do not have access to the mainstream financial services offered by banks or other providers. Reasons for this include geography or location, deficiencies in infrastructure, or the prohibitive costs of basic banking services, particularly in developing countries. However, cryptocurrency provides these individuals with access to a globally recognized currency and allows them to access vital financial transactions without having to open a bank account or line of credit. Cryptocurrency brings the global financial market to more users worldwide. To investors who are betting big on cryptocurrency, the potential gains of Bitcoin and its counterparts are more than the potential losses, due to the speculation that these virtual currencies could become truly global currencies in the near future. Some economists even speculate that Bitcoin could appreciate in value to about 20,000 times its current price. This can easily become a reality if Bitcoin begins to be recognized as legal tender for international trade. Part of your due diligence as an investor is also looking at the downsides or weaknesses of cryptocurrency. One of the reasons to be cautious about virtual currency was already mentioned in the previous chapter: security issues. No matter how many cryptocurrency platforms and currency exchange websites beef up their security protocols, hackers will always look for ways to identify vulnerabilities and capitalize on these. Virtual currencies are subject to human error, forgetting or losing passwords, technical problems, hard drive failures, malware, phishing attacks, hacking, fiduciary fraud, and other harsh realities. Being aware makes you more cautious as an investor and spurs you to take security and privacy very seriously. Another disadvantage for cryptocurrencies would be looming oversight or increased regulations from governments and other enforcement agencies. As Bitcoin and other virtual currencies move further into the mainstream, states and financial institutions could target the very decentralized peer-to-peer nature of these platforms and cause more strict regulations to seek to control cryptocurrency activities. Also, an area of concern is the issue of scaling for Bitcoin and other virtual currencies. In the article Advantages and Disadvantages of Investing in Cryptocurrency for Steemit.com from June 2017, it is noted, the problem of scaling in the Bitcoin network is not yet solved. Meanwhile, the network bandwidth has long been a concern, and the increase in commissions makes it unprofitable to small transactions. Example associated with the sale of Bitcoin is mined Bitcoin cranes. And transactions with a decent commission are often stuck in the network. None of the solutions to the problem, or soft update, segregated witness, no hard Bitcoin unlimited, is a perfect solution. If updates to the protocol will not happen, it will mean worsening traffic problems on the network and the weakening of the position of Bitcoin as a payment instrument. Overall, the underlying disadvantages of cryptocurrencies are far outweighed by their inherent strengths. So it still makes more sense to invest in the burgeoning virtual currency sector, riding its wave all the way to the top and benefiting from its lucrative rewards in the process. In the next chapter, we will go over some trends in the cryptocurrency market that you should be aware of as you begin to invest in the currency of the future. Chapter 5. Trends in Cryptocurrency. Cryptocurrency is a rapidly evolving market, and as an investor, it would be to your advantage to stay informed and aware of the various trends and movements in this sector. Market trends affect the prices and transaction volume of the virtual currencies, although it can be said that volatility has calmed down somewhat compared to the early years. Still, being fully informed will ensure that you are positioned to take advantage of an opportunity to earn, or ready to cut your losses in case of a downturn. It goes without saying that as an investor, you should be abreast of the happenings in the financial world, knowing fully well that events, press releases, and other major announcements in the global economic sphere may have some effect on cryptocurrency platforms, whether it be positive or negative. As an example, a major financial institution announcing that it will begin to offer Bitcoin trading can cause an immediate run on Bitcoin buying, spiking the price. If you are aware, you can jump on this chance to sell high and earn big profits. One trend that has many financial insiders and traders excited is the explosive growth of Bitcoin in China. Already, about 94% of the total Bitcoin trading worldwide originates from Chinese exchanges, particularly the big players, BTCC, OKCoin, and Huobi. In 2016, Bitcoin volumes for China saw a 300% increase from the previous year. The CEO and founder of Huobi, Leon Li, recalls how the sudden explosion of Bitcoin in China around 2013 brought it to mainstream consciousness, but also caused initial pushback from the government. On 19th November 2013, Bitcoin reached the all-time high price of 8,000 CNY on the Huobi exchange, which was a 20,000-fold increase in price from 3 years before. This extraordinary development brought an unprecedented level of public attention, but also deep concern from government regulators. On 5th December 2013, the People's Bank of China and 5 other related government ministries issued an official notice titled Guarding Against Risks of Bitcoin, which stated Bitcoin may not be used as a currency. Li said in an article which appeared on Coindesk.com. Li continues, legislation in the financial sector should be limited in purpose to preventing systemic risks to the financial system and preventing financial crimes. Regulations must not be too strict, or else the global competitiveness of Chinese enterprises will be inhibited. Already, relaxed legislation and a greater understanding of Bitcoin and other virtual currencies in China have contributed to further growth. Another trend to watch out for is the continued growth in international demand for cryptocurrency, particularly in countries that have deficiencies in financial infrastructure and where many citizens lack access to traditional banking and financial services that are readily available in developed economies. This does not mean, of course, that growth will be focused in developing and emerging markets. Even markets with developed financial systems, such as India, Japan, and the Middle East, are showing greater cryptocurrency demand, particularly because of virtual cash solutions for international payment settlements. The major cryptocurrencies, Bitcoin, Ether, Ripple, Litecoin, will become more stable in the next few years and become more accepted by traditional banks and financial companies. Many well-known banks already offer services related to Bitcoin and other virtual currencies, whether it is for trading, brokerage, IRAs, payment gateways, and more. One of the most recent examples is Falcon Private Bank, a Swiss private banking firm which announced last August 2017 that it is partnering with Bitcoin Suisse AG to offer trading services to customers who want to use virtual currencies Bitcoin, Ether, Litecoin, and Bitcoin Cash, an offshoot of Bitcoin. Per the report from ZDNet.com's Charlie Osborne regarding the partnership, Falcon's break into the virtual currency market is aimed at offering high net worth and institutional clients direct exposure to what is now a whole range of the top market cap crypto assets besides Bitcoin. The Zurich-based bank already offers crypto asset management solutions which allow the purchase, trade, and holding of Bitcoin. Now, with the expansion of more cryptocurrency beyond Bitcoin, of which the trading price at the time of writing is $4,017 per BTC, clients can trade in virtual currency of different financial value. Falcon Private Bank was the first to offer Bitcoin to its customers, as pointed out by Bitcoin Suisse CEO Nicholas Nicolaisen. Their decision to follow up by adding Ether as well as other crypto assets has made them the go-to private bank for crypto asset holders and investors, he reiterated. As more and more banking institutions offer cryptocurrency services, this will also open greater investment opportunities to a larger segment of the market. Investing in crypto-funded startups will become easier as transactions become more seamless, allowing for easy transfer of funds from fiat to crypto. This cuts processing times and lowers fees, leading to more capital available for innovations in the use of blockchain technology for applications beyond the financial sector. It is also an opportune time to include cryptocurrencies in your investment portfolios. Not only does this give you earning potential, but it also adds to the funds you can dip into for other investments you may be considering. Diversifying your portfolio is still one of the smartest techniques you can utilize so that risk is spread out quite evenly, and you have leverage in case a downturn is experienced in one of your investments. At the same time, any gains would also be added to your wealth, increasing your worth. These are exciting times indeed for the cryptocurrency sector overall. It is a great time for you to jump in and start investing because there is still a lot of growth on the horizon for virtual currencies, and you can still earn big bucks potentially. Final words. There is no get-rich-quick scheme that you can apply to investing in Bitcoin and other cryptocurrencies. It is not very different from any other type of investment out there, which requires thorough research and understanding, strategy, patience, and skills. Although it is a different playing court, the rules of the game for investing in Bitcoin and other cryptocurrencies are still the same as those for other investment opportunities. Your expectations should be realistic and achievable, but you should not be afraid to aim higher each time you hit a target that you have set. If you start investing in cryptocurrencies fully expecting to become a millionaire within just a few months, even if you do not do anything with the opportunities in front of you, chances are you will be set for disappointment. But if you approach it with an open mindset, willing to work and fine-tune your techniques, you will have a better shot at success. Learning should not stop, and when investing in Bitcoin and its counterparts, you should be ready to absorb as much information as possible from different reliable sources. This includes trusted news and information channels, online digital exchange forums, investment advisors, and other experts and financial insiders who can give you words of wisdom without bias or prejudice. Do not discount the importance of your peers, colleagues, family members, and other acquaintances who may already be involved in cryptocurrency investing and may be able to help you sort it out as well. Finally, as is the case with most investment opportunities in the market, do not be afraid to make mistakes. As a beginner, you are bound to fail at some point, perhaps losing an opportunity for a valuable trade, or stopping your loss too late and losing a lot more than you expected. It could be betting on a wrong venture or neglecting an important security protocol and exposing your virtual currency to hackers. At some point in your investment efforts, you will commit a mistake. When you commit a mistake, however, how you pick yourself up and recover from the situation will determine whether you can stay in the cryptocurrency game longer, or if you will just throw in the towel and quit. Becoming filthy rich through cryptocurrency will take some time and require lots of strategy on your part, but the results will be well worth it in the end. Once you are reaping the financial rewards and enjoying a standard of living that is far better than what you are used to, you will appreciate it more, because you know you worked hard for it, and you could use the currency of the future to fulfill your dreams. Thank you again for purchasing this book on how to get filthy rich investing in Bitcoin and other cryptocurrencies. We hope that, through the information presented in this book, you could understand the ins and outs of the cryptocurrency market better, and why it has taken much of the financial world by storm. It is not a fluke by any means. It is a revolution that is poised for world domination. The only question now is whether you will be part of the movement and reap the financial rewards of investing in the future of money or not. This has been How to Get Filthy Rich Investing in Bitcoin and Other Cryptocurrencies. Why it's not too late to become a millionaire investor with digital money. Written by Maxwell Emerson, narrated by Tom Johnson. Copyright 2017 by Maxwell Emerson. Production copyright 2018 by Maxwell Emerson.
Audible hopes you have enjoyed this program.